All right, let's talk about trading. It's a word you hear thrown around all the time, right? But what does it actually mean when someone says they're trading? Is it just some form of high-stakes gambling or some secret language for Wall Street? Well, we're going to break it all down, get to the real definition, and figure out what it's truly all about.
So yeah, let's just dive right in with the big, fundamental question that gets this whole thing started. What exactly is trading?
Okay, here's the textbook definition. At its absolute core, it boils down to this: buying and selling these things called financial instruments. And you're doing it with one single goal in mind: to make a profit. Simple, right? Well, maybe not so simple. That definition, as clean as it sounds, actually hides a whole lot of detail. So you know what? Let's unpack it. Let's go piece by piece and see what's really going on under the hood.
First up, let's tackle the what. The definition uses this phrase, financial instruments. And yeah, I know, that sounds a little formal, maybe even intimidating. But what are we actually buying and selling here?
The easiest way to think about them is just as assets, valuable things that you can buy or sell. Kind of like a digital version of a rare comic book or a super valuable baseball card. At the end of the day, they're simply the stuff that people are trading back and forth in a market.
So, what kind of stuff are we talking about? Well, I bet you've heard of the most common ones. We're talking about things like stocks, shares, and funds. These are, you could say, the classic pieces on the trading game board.
Okay, so now we know what's being traded. That's the first piece of the puzzle. Now let's get to maybe the most important part, the why. Why even do this? What's the end game here? It all comes down to profiting from something called price fluctuations, a fancy term for the constant ups and downs in the value of an asset. And this is the key insight, really. You don't make money just by holding on to something. You make money from the change in its price.
And here's how that logic breaks down. In theory, it's a pretty straightforward three-step process. Step 1, you try to predict which way the price is going to move, up or down. Step 2, you act on that prediction, right? You either buy or you sell. And then step 3, if you got it right, you cash out, you close your position, and hopefully you've earned a profit. Okay, this brings us to the final, and I mean really crucial piece of this whole puzzle. This is the part that truly separates trading from other things like, say, investing. It is all about the when.
And that defining characteristic is that it's short-term. See, trading isn't about buying something, putting it in a drawer, and forgetting about it for 10 years. No way. It's an active game. It's about trying to capitalize on those price movements as they're happening. We're talking today, this week, maybe this month.
All right, so we've covered the what, the why, and the when. Let's put all those pieces back together now and see the complete picture of what trading really is.
So let's recap. The what? It's buying and selling financial instruments like stocks and shares. The why? To try and make a profit from all those price swings. And the when? In the short term. That right there is the essence of trading. So you can see it's definitely not a passive wait-and-see kind of thing. It's a dynamic, active process. It's all about making quick decisions based on where you think, where you predict, those prices are going to go next.
Which, when you think about it, leaves us with a pretty fascinating question, doesn't it? If trading is all about making these active, short-term predictions on where prices are headed, well, is trading, at its heart, just the art of trying to predict the future? It's something to think about. Thanks for tuning in.